Jeremy, good morning. Good to see you. First of all, maybe just help us out and situate where Circle lies in this entire kind of ecosystem, the issuer of the USD coin. What is this new investment going to further enable you to do?
Thanks, Mike. Yeah, so Circle is the issuer of USD coin, as noted, and USD coin is obviously referred to as a stablecoin. We describe it as a dollar digital currency. What we're really trying to do is provide a platform that anyone in the world can build on top of to bring dollar transactions to their applications on the internet. We've seen this incredible growth in blockchain technology. It allows anyone with a digital wallet, piece of software, hardware, anywhere in the world to connect and transact. And what we've been really working on is really trying to provide a trusted digital currency model that's, based on the dollar, that's, within the care and custody of the U.S. regulated, banking system, and that allows people to transact basically instantly, globally, and at near zero cost. So we've been building out that infrastructure. It's grown incredibly fast, 1,000% growth in 2020, another 1,000% in 2021, and off to a fast start this year. The financing, the $400 million, as noted, it coincides with a SPAC. Where the company increased its valuation 100% from our originally negotiated SPAC deal. And with the $400 million, it's not just the capital that's going to allow us to grow. It's also the strategic partnership with BlackRock. So this is a strategic investment from BlackRock and really aimed at, I think, for them, increasing their role in this ecosystem with a trusted firm like Circle, and really trying to advance what's possible with stablecoins, with dollar digital currency on the internet, including future applications in the broader capital markets themselves.
What types of transactions would potentially be displaced, or would this apply to? Both what's going on right now, you talked about the digital transactions that are done all over the place app-based, but also in the capital markets.
The way we think about this is, the internet has brought technologies that allow us to exchange data, information, content, communications instantly, globally, and at no cost. And that's the power of these open, global, decentralized networks. And that's transformed so many industries. That's what stablecoins, blockchains are doing for money. And what that means is that over time, basically, the cost of transacting will basically go to zero. The movement of value will move at the speed of the internet. And that has really profound implications. Our own belief is that eventually every form of digital commerce, every form of financial application, every form of capital markets application is going to be built up around digital currencies on these networks. And so what does that really translate to? If you think about traditional capital markets, T plus 1, 2, 3 settlement, people taking counterparty risk, people taking collateral risk, looking at all the issues that exist with the kind of continuous movement of markets, which if you're in the digital asset space, you're living in a 24/7, 365 continuous market. The traditional markets are not. I think digital currency, and in particular USDC, and what we can do with BlackRock can actually make a difference and really enhance the speed and assurances and efficiency that can be had in traditional markets.
Yeah, it's really a 24/7 trading environment. I'm curious, there's been some debate on Capitol Hill with regard to the treatment of stablecoin issuers like yourself as banks. I know you've said in a recent interview that you're in the process of starting to apply for a bank charter. How do you think that the stablecoin issuers should be regulated? Do you think that they should be regulated like banks? Do you think it should be slightly different, that they should kind of carve out their own type of regulation, just given the differences between what you do and what a traditional bank does?
Yeah, it's a great question. We have been focused for some time on really trying to establish national policy frameworks around stablecoins. And many other governments around the world are beginning to do this. I think the opportunity for the United States is to define that national policy, create a federal supervisory model for dollar stablecoin issuers such as Circle, and cement the role of the dollar as a digital currency on the internet, and do that in a well-regulated fashion. Now, specifically, there are really great proposals coming forward from both Democrats and Republicans. I think this is a nonpartisan issue, getting this right. You're seeing that emerge in the House, the Senate, and other parties. And I think what's emerging is a framework that regulates issuers at a federal level, but allows non-banks to also issue stablecoins, but has requirements around transparency, auditability, the specific reserve requirements, liquidity requirements, anti-money laundering requirements, the kind of fundamental building blocks that are needed. But the thing to remember about dollar digital currencies like USDC is their full reserve. We're not like a traditional bank where we take deposits and then lend them out 8 or 10 times over with leverage. It's a full reserve model. We're trying to build a kind of banking and payments model on a more sound money basis, on a full reserve basis, which is what we think the world of internet money is going to demand.